The nervous 90s, that's exactly what happens with the Indian markets once again. From highs after strong global cues, the Nifty as well as the frontline indices see a bit of a sell-off. Midcaps continue to fare better, the index up 0.75%.
Bharti Airtel surges in trade after the management called for an industry-wide tariff repair with the participation of telecom operators. Brokerages are also bullish on the stock.
Honeywell Automation dipped post numbers as the stock saw profit taking, but from there on it's recovered nearly 12% from lows, up at the high point of trade. After a mixed bag of numbers, Nomura maintains its buy call on the stock, raises its target price all the way up to 53,600 rupees per share.
Apollo Tyres rolls higher and is the top gainer on the Midcap index after upbeat brokerage commentary a day after its Q4 results. Nomura upgrades the stock to neutral, says fourth quarter numbers were impacted by lower revenues and EPR provisions.
Titagarh Rail zooms on back of its fourth quarter numbers. The margins expand while profit rises 57%. The management tells CNBC-TV18 they expect pickup in execution in FY25. Passenger will be the story of FY26 and FY27.
Good morning, it's 10:30. You're watching Chartbusters on CNBC TV18. I'm Hormus Fatakia. With me is Manglam Malu. And just as Manglam was highlighting, it's the nervous 90s that has stuck the Nifty yet again. Opened higher, went past the 22,300 mark, but it just does not seem to have enough legs to sustain above that level. And we are back into the red now on the index as we speak. Almost 120 points now off the highs of the day. 22,319 was the day's high, and we have reversed from those levels. No support coming in from the banks whatsoever. The PSU banks that were the outperformers yesterday are in the red this morning, as is the Nifty bank, continues to remain sluggish as well. What is the support coming from? The broader markets continue to do well. They are in a league of their own, Manglam. The mid-cap and small-cap indices are in the green.
Yeah, absolutely. You know, the mid-caps and small-caps are doing extremely well. The good part is that the broader market health is a lot better. Two stocks advancing for every one stock which is declining. Though it will be very interesting to see, Hormaz, whether we see another pickup from the lows in today's trading session or not. And if we do, and were we to cross today's high, then there could be a lot of case for short covering because of the fuel that is being provided by the FII shorts in the system. 2.5 lakh net short contracts. So let's see where we go until we cross that 22,300 to 22,330 sort of congestion zone, which house both the 50 and the 20-day moving average of the Nifty. All bets on the long side may perhaps be off the table, but currently, if there is another recovery, we will most definitely keep an eye out on that, especially because it is also weekly options expiry. Let's get you our ideas for profit segment from our colleagues at Money Control Pro. In the meanwhile, Madhu Chanda Day joins in with a stock that she's been tracking. Madhu.
Persistent system has corrected by over 12% in the past 4 months, and especially post its Q4 earnings release, as the street got spooked by the margin underperformance. The real culprit behind persistent stock price correction has been its steep valuation, thanks to the significant outperformance in recent times, riding on strong fundamentals. Persistent has been an industry growth leader in the past couple of years, with revenue growth of over 35% in FY23. Amid a tough demand environment, Persistent delivered a 14.5% revenue growth in FY24, whereas most of the larger peers were struggling to cross the low single-digit mark. One of the key negatives from the earnings report has been the flat margin performance, as the management is not willing to forego growth for margin. Order inflows, however, has been steady, and the company has seen headcount addition. With the projected earnings CAGR of 24% between FY24 and FY26, the PEG of the stock is 1.3, which appears to be a good starting point for a gradual accumulation.
Right, so that is an idea for profit. Let's focus on Indian Energy Exchange. That's the stock on our radar right now. The company reported its numbers. The revenues rose by about 13% on a year-on-year basis, but the margin saw a bit of a contraction. Rohit Bajaj, who's the Executive Director of Business Development and Strategy, as well as Regulatory Affairs, joins in now. Thanks a lot, sir, for joining in. 13% revenue growth. But, you know, it seems that there was perhaps a decline in the market share of IEX in the fourth quarter and also in April 2024. Could you give us a sense? I mean, have other exchanges cut prices? Why is it that volumes in the term ahead market for IEX are dipping?
So if you see our overall market share for FY24, the number stands at around 84%. So there are various segments, you rightly said. The DAM and RTM segment, we are commanding close to 100% market share. In term ahead market, where it is not double-sided closed auction and it is more of a bilateral contracts, there our market share is close to 60%. And then there is a REC market, certificate market segment, where also, if you look back or in last year also, our share was around 65 to 70%. So we feel that this is 84% is a very healthy share. We were little higher a couple of years back, but we are able to maintain this for last 2 years. And going forward also with on the strength of DAM and RTM, we expect DAM and RTM, these two segments to grow going forward, because till last year, what was happening, there was supply side constraint and there was no certainty of supply. So majority of these buyers, they were entering into short-term contracts, which is spread over up to 3 months. So as the supply side are easing out, we have seen this year, the coal production has increased, the PLFs are better, imported coal, gas, all those prices have come down. Government has taken various initiatives because of which supply is actually increasing. Because of that, we are seeing that there is more traction on the day-ahead market and real-time market. So in fact, there were certain months where January, December, where our overall market share was much ahead of 90%. So we are giving that.
So you've lost market share in at least the term ahead market in the last quarter and even in April, right?
So term ahead, if you look back, it was never 90%. It was always in the range of 60, 70%. And even today, it is 55 to 60%. If I talk about complete year FY24.
But Mr. Bajaj, do you think that at 84%, as you were mentioning, with the rise in competition and the prices as pricing trends as well, do you expect to maintain that market share at 84%? And part two of my question is, I also wanted to ask you about the market coupling bit, but first you can answer about the market share and then we get to the market coupling.
Yes. So the first part is, as I mentioned that DAM and RTM, our market share is close to 100%. And these two segments are contributing today about 76, 77% of the total market. And going forward, as I mentioned, that supply is easing out, people are coming back to day-ahead market, probably this will be 80, 85%. As this segment will grow, our market share will grow. And then we are also maintaining our market share in term ahead market. So we expect that this number can improve, or at least we would be able to maintain this 84% market share going forward.
So what's the current status of the market coupling, Mr. Bajaj? Because this is a setback for you as well as a company. What have you heard from the ministry? How have the test runs been so far? And we need an update from the ministry as well, because it is insisting that it should be implemented.
Yes. So there was a last order by regulator which came on 6th February 24. And in the order they mentioned, they gave direction to Grid India to implement shadow pricing. Shadow pilot is to be done. Now, they had given certain timelines. They gave timelines of 2 months to create that software, and then they have to run it for 4 months, and they have to collect data from all the exchanges. So it's already 3.5 months. We have not heard anything about, they have not requested data as yet. And we are given to understand that this software development is going to take a lot of time. And once this development is done, then they will start to collect this data, and then they will figure out whether it is creating any value. I'll also talk about what was mentioned in the order of CRC, where they themselves said that they did some analysis internally, and there was no significant gain in volume also or in the price also. So there is no gain which was observed by CRC, and this is precisely the reason why they want to do it for a little longer term. So our take is, now the objectivity is there. They want to achieve certain things by, they are analyzing it on the basis of what they are achieving by doing market coupling. And once the test is done, then we'll get to know what sort of benefit is coming, and then in due course of time, our new market design will evolve.
All right.
This is going to take a lot of time. This is what?
Can you define a lot of time?
It is going to take a lot of time because software is to be developed.
Can you define what is a lot of time? Is it 6 months? Is it 1 year? Is it 2 years?
So our take is, it is definitely going to be in years. It cannot be in months. It is going to be in years for sure.
All right. And, we were just going through the CERC website, and there's a staff paper there which says there could be capping of variable costs for power producers. Yes. I mean, could there be an impact of that? I mean, will there be reduced sell-side liquidity? Can then people have bilateral agreements instead?
So if you see that paper in detail, you will find that they have also mentioned that majority, almost 95-99% of the bids that are coming in the exchange, it is in the same range. So today when the prices are going up, it is going up because buyers are quoting little higher price. When the price is 10 rupees during the peak hours, it is not because of sellers. Sellers are quoting as per their generation cost only, because they do not want to quote higher price, because if they are quoting higher price, there is a chances of losing out. So losing out on the opportunity to sell. So they are quoting purely as per their marginal cost, which is what paper is mentioning. And in the present form, what paper has given, we really do not see any impact on the liquidity on the sell side, because this is what is happening. Only thing is monitoring will be done going forward. So there won't be an impact.
There won't be an impact. All right,
Absolutely.
Mr. Bajaj. How have volumes been, Mr. Bajaj, in the first quarter? Because summer is peak season. What are the volume trends that you have observed so far?
So we are already 20% up if I compare first 45 days on YOY basis. So we are seeing very good traction in the electricity volume, also in the certificate volume. And prices are also quite decent. You must have heard about it. There were a lot of apprehension that April and May during election time, and you can say this is the peak summer time. Everybody was expecting that there would be huge demand, prices will go very, very high, and there would not be any liquidity available on the exchanges. But those things are not true. Government has taken so many various measures, and because of that, there is a lot of imported coal-based power which is coming. And one more recent development which is very noteworthy is government has notified one rule very recently, wherein all the surplus power which lies with the PPA holders, that has to come to the market. This is one very important development, and we are seeing already 40-50 million units sort of bids are being placed by all the generators who have long-term PPA in place. And this is mandated because they won't be able to recover their fixed charge if they are not putting this power on exchange. So this is one extremely important development, and this, along with so many other developments, has resulted into ample liquidity on the exchanges, and we are able to register good growth volume in the first quarter also.
Glad you alluded to that. We were just about we were just about going to speak to you about this development itself. Glad you alluded to it. So with the power volumes being up 20% this year already, you have a decent foresight of what FY25 could look like in terms of volume growth for you, and at the same time market share?
Yes. So first is last year we registered 14% growth, and last year is the one where we were the things were rebounding when the supply side constraints were easing. So today, as we stand today, there is a lot of coal availability in the country, and all the units are up and running, and they are coming on the sell side. So we expect this growth momentum will continue. We would definitely be able to maintain a better volume growth as compared to last year, which was 14%. So we are expecting higher number for sure. Last year, our overall market share was 84%. And as more and more people will start to come in, they had an RTM market. And as we are also offering 11 months contract. So we are the first exchange who has gone to regulator to introduce longer duration contract. Currently, we are offering up to 3 months. Going forward, as we get approval from regulator, it is expected very soon, we would be launching products up to 11 months. And if we do that, we are 100% sure that we should be able to improve our market share much up from where we are today, at 84% level.
All right, Mr. Bajaj, we'll leave it at that. Thanks a lot for joining in and sharing your views on your quarter gone by and the road ahead there. That was the management of IEX, confident of improving its market share going forward. The stock there at recovering from the lows of the day there, 2% higher, close to 150. Time for a short break. Up next, the management of Thomas Cook joins in to discuss the quarter gone by. Stay tuned, back on the other side. Back with us here on Chartbusters, and the next management is Thomas Cook. It's on the back of its fourth quarter results. The margins saw an expansion. The revenue and the EBITDA also rose on a year-on-year basis. Mahesh Iyer, the managing director and CEO of the company, is joining in to discuss the quarter gone by. Mr. Iyer, good morning. Thanks a lot for joining in. How has business been in the summer so far? Peak travel season, the vacation months as well. How is business looking like right now?
Thank you so much for having me on the show. It's a pleasure always to talk. Yes, the forward bookings are looking very strong. We are currently looking at about 18% forward booking growth over the previous year. So summer has actually begun very strong. Obviously, because of the elections in the country, there has been some postponement, and our belief is that we're actually going to see a longer summer season this time. Usually we see the peak starting from April and ending somewhere in June. This time our expectation is that we'll see this all the way running into August also. So yeah, I think we have a long pipeline ahead of us, and I'm remaining very optimistic about the summer ahead.
All right. So the last time you spoke to us, you said that you all will see double-digit growth in FY25 on both the revenue as well as the profitability. If you could give us a sense of what's your outlook now that you've seen 18% forward booking growth itself, at what rate is the overall company likely to grow in FY25? What kind of margins are you targeting?
So if you look at the year that went by, we've had a very strong growth. Our revenues grew about 45% and consequently EBITDA multiplied many folds. And also our EBIT margins improved by about 300 basis points in the current quarter and for the full year. We expect this trend to continue, both in terms of revenue growth as well as profitability. And some of the drivers for that is that there is a strong desire for travel, and we are seeing the volume growth actually coming through, and our forward bookings are reflecting that. Also, the initiatives that we have taken in terms of cost transformation during the pandemic have all played out and are sustainable. Thirdly, the digital adoption is actually working well for us, which has improved our productivity substantially. We believe that all the three drivers that we have on this business should help sustain the growth momentum in FY25.
Since you mentioned the pandemic, Mr. Iyer, you had also mentioned that you would cross pre-pandemic levels in FY25. Do you stand by that statement? And part two of my question is, in terms of travel trends, are you seeing more short-haul travels during this booking season that you're witnessing?
Yes. Let me take the question in two parts. The first one, for FY25, you're right. We expect the growth momentum to continue. We expect the margin expansion to continue to happen on that. As far as trend on travel is concerned, we definitely see a shift. Earlier, it used to be more long haul. The group travel used to be more long haul driven. Today, what we see, the trend shifting to more short haul. And that's driven by the fact that people are looking at more shorter breaks. So clearly that trend is visible, and our recovery on the short haul is much higher as compared to the recovery on long haul. You would remember that we said the long haul was impacted last year during summer with regards to some visa challenges. A lot of that is behind us. The Schengen regime has changed. They are talking about long-term visas ranging from 2 years to 5 years, which I think will also propel the short-term travel trend, because now people can actually, who have got long-term or multiple entry visas on their passports, can plan their holiday at a very short notice. And we believe all of that will help the short-haul business to grow. Also, short-haul destinations like Middle East, Singapore, Far East are all excited about India. India seems to be the biggest market for them. They have doubled up their investments in this country. And I think a lot of growth momentum will come from the short-haul market. Not to miss the domestic side of the portfolio. I think spiritual tourism and adventure tourism in the country is catching up very fast. We are seeing a lot of demand coming from there. And I think we operated our first charters to Bhutan out of Bangalore, and we've seen 100% occupancy on the charters. So clearly, I think the trend towards domestic is also auguring well for the business.
Right. Let's talk about two other parts of your business, which are relatively smaller, but may go through underlying disruptions as well. This is the financial services and the Digi-Photo business. For the financial services, with in the world of easy forex transactions, in the world of UPI scaling up beyond India, what's the scope of growth here that you foresee? Fourth quarter as well, the growth was sub 6% out here. And even Digi-Photo, I mean, all the things that you offer in Digi-Photo, a lot of that can be replicated with the phone that everyone has. So I'm just trying to figure out what's the growth potential here and the underlying disruption.
Sure. So first, coming to foreign exchange, you must understand that it's a scale business. We do about $3.5 billion a year in terms of top line sales. So that's a large volume business. And on that, volume growth will be in the range of about 10 to 12%. And that's what our expectation is. I think if you look at the portfolio overall, there is a retail business that we do, which is more like the student segment. There is the remittance segment. There is the corporate segment. I think all of them are witnessing double-digit growth. Now, the retail segment also includes the students as well as the travelers. And on that, we are actually seeing a high double-digit growth. In fact, in the quarter that went by, our retail business actually grew by 18% and margin expanded by about 20 basis points. So clearly, the retail growth will fuel a lot of demand that is there coming from the travel segment. From a prepaid portfolio, we have a large prepaid portfolio, and I think that is where we address the UPI challenge. while UPI and cross-border is something that's happening in the neighboring countries, I think acceptability worldwide is going to take some time. And that's where our prepaid offering, which is the Thomas Cook prepaid card that we offer, actually fits into the scale, because we have a multi-currency and a single wallet for the customer to seamlessly load. And we have also launched the digital KYC for the customer. So he can sit at the comfort of his home, load a card for himself, get it delivered at his doorstep, and seamlessly travel. So one is to do it on the phone, the other is do it on a card, and the card is also digitally enabled. So which means, like UPI, he can put the plastic on his card and he can use it seamlessly overseas. So I think we are up the game in terms of how we can look at the UPI part of it also. But I'm also happy to let you know that we also work with RuPay, and we are in active conversation with NPCI to say as to how we can expand our offerings in terms of building more on the RuPay side. Coming to digital. Yeah, sorry.
All right, Mr. Iyer. I'm falling short of time, but thanks a lot for joining in and sharing your views on the road ahead for your company and on the quarters ahead as well. That was the management of Thomas Cook there, sharing their views on the quarter gone by. They're 1.5% lower at 215. That was the management of Thomas Cook. But time for a short break. Back with more on the other side. Stay tuned. We'll be right back. Back with us here on Chartbusters, and the Nifty has slipped below yesterday's low of 22,151. It made a low of 22,133 now, and it's a slight recovery from those levels, but it has slipped significantly from the highs of the day. The broader market's doing well, but the banks remain the key laggards this morning.
Let's see where this goes in the second half of trade. We're veering towards the lower end of today's trading range. So we'll take your leave on this note, and you stay tuned. There will be trading hour taking all the market action forward. From Hormaz, me, the entire team, thank you for watching.